Do you know what a Rolls Kinarly is? I'm 100% sure that you don't. It's one of those really corny daddy jokes, so stick around to the end of the video so you can learn all about the Rolls Kinarly.
Sure, I've been trading probably like 15 years, 20 years, trading, trying Forex, trying stocks and futures. I follow up, with Tasty Works and other, methodology using strangles and selling puts, selling, cover calls, premium and whatnot, and generate some income. They work well for a while until, if the market has an adverse move. Then you kind of like undo all your gains, if not worse, digging a hole that's deeper than your anticipate what you're going to invest in the spread or in that naked puts. And then the worst is cover call keeps making a little bit of gains, and then you lose big when the stock crashes. You have 9 good trades and you have one bad trade that pretty much wipes out all the gains, or maybe even undo all your account.
So one of the benefits of trading options over equities is that you can create a system that could really profit in any market direction. We call this an all-weather system.
And so, with this system, I like this. It's hedged. It's almost an all-weather system. You can position it so that you can take advantage of massive rallies, as well as if there's a crash, you can hedge off the crash. Little crash, you can do some micro adjustments to get out of a good trade. Sometimes like during COVID, we dropped like 40, 30%, 10% one week, for example. Like we had no problem, right? So the positioning of the Vega and the Delta and all that, really helped the position as it crashes. On the downside, the speed of the movement of the market going down, you have plenty of time to do the adjustments. If you were naked short puts, you wake up with a gap of 10%, 20%, you'll be in big trouble. You don't have time to react. On this trade, things are calm, calm collected. You can wait for market bounce to do the adjustments. You can trade. Or if you don't do anything, as the market crashes, you end up making money regardless. Oh, yes.
Calm, cool, and collected. Well, that's how you really want to feel during a market crash. But you can only feel this way if you're structured properly.
So during the COVID crash, I think that the first leg down made a total of several $100,000. I took advantage of the bounces as well, so both directions would end up, on the way down was 150,000, and on the way up, I made, the rest of the year was like, after Jerome Powell came in and, lowered interest rates and whatnot to save the economy, took advantage of that on the way up as well. It was a very fast move down. A total of that year, 2020, I think we made about $480,000, for a year. That's crazy volatile, right? So most people would have been wiped out. They wouldn't have been able to play the upside, because the downside just wipe you out, right? I had a position on, although I missed the bottom, the next day I went in, and that one trade made like $120,000 or something like that. It's like tremendous.
So I really like what Lei just said there. He made a really good point. If you were listening, he said that most traders can't really participate in that bullish rebound because they just got wiped out in the market crash.
Yeah, Core 5 is highly profitable. I mean, I'm looking at even this year, even during the bear market, I was bullishly positioned, but yet I still end up making money during this entire crashes. Yeah, I think overall with the SJ option system, I think I haven't had a loss for 5 years, maybe in 6. Every year we churn out a good chunk of change. In the beginning, it wasn't a huge amount of money because I didn't use all the margins, but every year since I graduated from the program, I'm not sure it's such a thing as graduated from the program, but it definitely paid off hundredfolds, based on what I've learned. So yeah, it's definitely it's consistent. If you keep up with it, it's hedged really well. Like we suffer. I mean, I went through so many bear markets, so many bull markets. Now it's like it's crazy, right? So every time we look up, there's get hit by COVID, hit by 2022 inflation year where we had a correction of 20% on the S&P almost.
So it can really take a number of years to really develop your option strategy. You really have to trade them through market crashes, through the sideways markets, through bullish markets. How are you going to know just how successful and how solid your strategy really is? It's got to be time tested. So it can really take 10 years, 15 years so that you can see all these markets and you can make sure that your strategy is really what you think it is.
Yeah, I mean, if you were on selling puts on when VIX was 80, I don't even know what's going to happen to your account. Like you probably owe money to the broker. Yeah, and so that was the key. Now that after that, then we traded back into a bullish cycle, made money there, and actually going when the market does this, trending up is really this system is even easier to trade. It's like you just kind of park it there, and every little percentage the S&P moves up. You get paid a lot. Up. The bullish mode is where you're going to make the most money on this system after we bottom out. I mean,
so what Lei's talking about here is the up capture ratio. When markets go up, you want to make sure that your strategy goes up just as much or even more than the market. This is where some of those other strategies fail, like the covered call. And that type of strategy can choke off your profits as the market goes up quickly. So it has a very bad up capture ratio. Remember, most of the time markets drift up. So position yourself to profit from those long-term bullish moves.
Yeah, it's kind of nice to make money on the way down, but on the way up, it's very calm, collected, and make a lot of money. Exactly. I mean, this is the time to practice, get ready for anything can happen, obviously. But as the S&P gets resetted to fair value, it's going to be a tremendous amount of opportunity, and going up is going to be market's going to go up probably slowly, or it could probably go sideways, and then maybe meander itself up slowly, and then that's where you have years and years and years of profits. I think. Yeah, on the last trade. I also realized it's also good for sideways. If let's say the market kind of moves sideways from before Thanksgiving with the CPI report, the market jumped 4% or whatever, but then we went sideways until now, and it's when you consolidate and you know how to position, you can make a lot of money as well. Like generate a good, a month of income. Yeah, I think that the secret sauce, one of the secret sauce is probably the OptionColors software.
So the OptionColors software, well, it really helps us know if we should enter the trade, exit the trade, and it helps us place all of our trades at a favorable price. The other thing it does is it'll help prevent you from taking bad trades. Lots of these trades that you actually take, you probably shouldn't be trading at all.
What it does is it allows you to do the fair pricing. When you set up a new trade, make sure that you're selling volatility at the right time. You're buying calls or puts, whatever, at the right price. So it helps you with the pricing, the timing of volatility, when to stay out, when to adjust. It definitely helps. Yeah, I think learn a lot on all the how options behave and how to maximize safety. How to manage your drawdown, how how to do a responsible allocation of these structures. Yeah, and then I think the core 5 really took off, like in terms of, okay, it's unlocking the next phase of option trading.
So Lei's talking about the core 5 trading system. It's something that I personally designed myself. In this trading style, it really takes advantage of volatility trading, and it also really incorporates those higher order Greeks, which are all crucial to your trading of options, although a lot of people really don't understand how to use them. And furthermore, it does comprise some attributes that can really protect your portfolio during a market crash.
So, which is really nice. Yeah, and the key thing is, I think I started, I forgot the year, I think 2011, 2012, I started with you. Yeah, I mean, there's no catastrophe losses since then, I think. And I think that's key. I mean, I traded futures and other ones. You make money, and then boom, you blow away pretty fast. It's like there's no consistency there. Here, there's like consistency on a larger time frame, right? Years and months. So that's which is really nice. Gives a lot of confidence in the system.
So Lei is a very experienced option trader, right? He's traded, 10 years, 15 years, and he's tried a lot of different strategies. You hear him mentioning that he's tried futures, and those strategies, they make money sometimes, and then they just blow up. So that's the problem with most strategies out there. They really just profit for a short while, but they sustain huge losses. And those trading methods, they really don't work long term.
Yeah, for the new guy, people learning options, I would be, especially selling premium. I'll be careful of going with something that's like, very simple, like a iron condor, or a strangle. Like it looks good on paper and has high probability until you can't control the movements of the market, right? So once your structure gets challenged, once you do the adjustments, you take a loss and you roll, but your margin keeps on decreasing as you do so, right? You're piling on losses after losses.
So what Lei's talking about here is another great point. With your iron condor or your strangle, and that type of strategy, I mean, most of these trades with the short gamma, what happens is, as the market whipsaws around, you have to constantly chase the market. You're losing money on every adjustment you make, which I call lowering the bar. So as you make all these adjustments through the life of the trade, what happens is, after a few weeks or maybe a month, well, then the bar is below zero and you can't make anything on the trade at all. In addition to this, oftentimes your buying power is going to go down. When you combine these two attributes of a trading process, then you end up with a trading system that really just churns the account. You pay a lot of commissions, you waste a lot of time, but you don't make profits long term.
And so this is nothing like that at all, so which is really nice. So this, I've done a lot of adjustments where I end up taking profits on profitable legs, and then just do the adjustments that way, right? And it doesn't reduce your buying power, which is key. Yeah, I think if it, for option trader, make sure you can understand risk. Understanding risk is key. Then I try to do some short-term trade as well, just to be engaged with the market. But this system is way more profitable than any other directional system I've used. Core 5 takes advantage of the swing, like it milks the risk reward, right? It milks lots of directional movements. Volatility, right? Milks the volatility. It milks the theta. It's like all cylinders are being fired, right? Like, if you look at the system, it's pretty cool.
And yet another good point. Lei says all cylinders are firing. This brings up a funny story. We're all teenagers at one time. One of my first cars was a 68 Volkswagen Fastback. So I was always trying to, work on the engine myself, make it run better. My uncle, he worked for Ford. One day with him, we took the engine out of the car and then we just dismantled the whole thing. When we got down to the cylinders, there was one that was completely blown. It was like all deformed. The metal was just It was like a bomb that exploded or something. And so, anyway, went to this Volkswagen parts place where they had all the used parts. And then we bought some new cylinders and put it together. And then it was amazing. We just got on road and the car towed off. It was like so fast. Anyway, so the thing is, see, when you're trading options, your trade, it really does have to fire on all these cylinders. There's so many different attributes that have to work well so that you can be successful or have these profitable trades consistently. And a lot of people don't realize it. But when you're trading, you're really trading volatility. You're trading time. You're trading the directionality of the market. You're also trading these higher order Greeks that people in general just are not. So in order for your trading system to really run smoothly, it has to fire on all these cylinders. And then you have to also have that protection just in case the market crashes. And then you have to have a good up capture ratio. So when the market moves up, you can at least keep up with the market and possibly profit exponentially relative to your underlying asset that you're trading. So it's not easy to develop a trading system that fires on all cylinders. Just like the Volkswagen I had. You know, it was a Rolls Kinarly, as my uncle would say, one of his funny jokes. He'd be like, "Have you heard of a Rolls Kinarly? That's what I own. Yeah. It rolls down one hill and it can hardly roll up the next." And that's like most option strategies that are out there today. They're Rolls Kinarlys.
Yeah, absolutely. I mean, a lot of people are down. I feel terrible. The market is down for people losing, down 20% of their, 401k or something. It's a horrible feeling, right? But I think you have to take charge of what you have and finance and start taking advantage of this system.